All right, let's get rolling. So what if you could have invested in digital payments infrastructure that would become the backbone of the $3 trillion cryptocurrency market? You will discover today how Alumni Ventures identified Circle as an infrastructure play, not a speculation, investing in the company that created USDC, now the world's second largest stablecoin, with over $56 billion in circulation. While others saw volatility and risk, we saw regulatory foresight, proven leadership, and the pipes that would power tomorrow's digital economy. Circle's journey from a $1.1 billion IPO to an 845% first month pop validates our contrarian approach, backing infrastructure over hype, compliance over speculation, and patient capital over quick wins. So today, scan any of the QR codes that you see on your screen to explore exclusive opportunities or jump on a call with any of us here at Alumni Ventures. All right, now let's dig in over to managing partner Chris Sklarin to take us away.
Hey, everyone. Thanks for joining us for this VC Masterclass inside Circle's blockbuster IPO. Let me first advance the slide and give you a little bit from our lawyers. As with most things here on the disclosures page, we got to pause and remind everybody we're speaking today about Alumni Ventures and our views of the associated venture investing landscape. The presentation is for informational purposes only, is not an offer to buy or sell securities, which are only made pursuant to the formal offering documents to the fund. Thanks so much, and you can read these in more detail at av-funds.com/disclosures. All right. So let me do a quick introduction of myself. Hi, I'm Chris Sklarin, managing partner at Alumni Ventures. I've been with Alumni Ventures since about 2017 and been a venture investor since about 2002, 2003 when I got out of business school. And prior to that, I was a software engineer and sales engineer, a bunch of companies after MIT in the late 80s and through the 90s. So saw several IPOs. The company was bought 3 times while I worked there. One of the companies was Inc. 500, #1. So all very exciting on the entrepreneurial side. And then I went off to get an MBA at Berkeley and came back east and started up with a seed fund, was with them for several years, a couple other venture firms, healthcare accelerator, and then most recently a later stage venture investor before I joined Alumni Ventures here in Boston in 2017. So happy to be here today and talking about this interesting investment in Circle. So what is Circle? Why we invested, how we got in, and a little bit about the post-IPO journey here and the validation. That's what we'll go through here today. But quickly, just about Alumni Ventures to get you all level set. Alumni Ventures, our company was founded 11 years ago, 2014, and we offer individuals an opportunity to own smart, simple venture capital portfolios. It's really the only and best way that I've seen for individuals to get into the venture market. We today have raised $1.4 billion plus from 11,000 plus individual investors, and we've invested capital in 1,600 plus current and historical portfolio companies. So Alumni Ventures is one of the most active venture firms globally and one of the largest domestic venture firms for individuals. We are comprised of about 120 people, 40 or so investment professionals located in our Manchester, New Hampshire headquarters and offices for the venture investor folks in Boston, New York, Chicago, and Menlo Park. Accomplishments to date, we started off with just a couple of very small alumni funds. We added, after Dartmouth, a couple small Dartmouth funds, we added MIT, Harvard, Yale as the next cohort. And we've since grown this to over 20 alumni funds. We have funds for certain areas, focused areas like health tech or a women's fund or a seed fund. I think we're now the leading venture firm for individuals in the world. We have a large, very engaged community in entrepreneurship. We have a very great team, top content brand. We're always publishing blogs and videos, et cetera. And I think we have a very, very robust sourcing engine. We put out this report, the Apex 50 report, which you can go to our website and check out. And that has 50 standout companies from the over 1,600 portfolio companies we've invested in. And they just were sort of talking about the ones for this year that we really feel like are outstanding contributors to sort of making the world a better place. And hopefully they'll bring us tremendous returns down the road. And part of the hallmark of our model is we're always a co-investor. This is just a quick sampling of investors that we've invested alongside. So some names you may be very familiar with. We also invest alongside very interesting sector funds that may be really expert in particular sectors you may not have heard of. So this just gives you a good idea of some of the companies we've invested alongside, but we really have many co-investors and really work very hard to sort of do a good job of finding great companies and also figuring out why they are going with those great investors and making these marriages happen. And then we can hopefully put a link 5, 10, 20% maybe of a venture round. So let me jump to Circle here. Circle is a very interesting company and is founded in October of 2013 by Jeremy Allaire, Sean Neville. They're a really interesting company and really trying to get out there and do the digital pipes for cryptocurrency. And right after we invested, I think in 2018 or so, they introduced this thing, the US dollar coin, USDC. And it's become a leading stable coin out there in the marketplace. It's used for payments, trading, and as core infrastructure, in blockchain finance. So really exciting. The story here in summary from Bitcoin startup really to fintech powerhouse, it was founded in 2013. Early mission was to enable these Bitcoin payments, and they operated a crypto exchange platform. Right after we invested, or right around the same time we invested, they launched the US dollar coin in 2018 and really wanted to be a stablecoin infrastructure leader. And we'll talk about this whole journey. They now are the world's second largest stablecoin. I think it was at the time of printing here, it was $56 billion plus in circulation. And in June 2025, which was not too long ago, Circle raised 1.1 billion in its New York Stock Exchange debut, and it reached a valuation of $6.9 billion. So we'll get into the details here about how this all happened as we go through the presentation. So Circle, what set Circle apart? So it's infrastructure, not hype. We really were excited about, really excited about Circle when we were looking at them. They created that US dollar coin, like I said, now the world's #2 stable coin. And I think it's percentage-wise was 27% market share as of June 5th when they went IPO. They aren't trying to disrupt the banks with a fancy application, right? They built something, here's a quotation from Andrew Lokanoff. They built something far more fundamental, right? They're doing infrastructure, right? Digital pipes, if you will, for digital dollars. They really had a compliance-first DNA outset and mindset when they got started, and they received a BIT license in 2015. So they embedded regulatory trust right into the foundation of the company very early on. They've always been focused on core infrastructure, so enabling digital transactions was sort of mission #1 for them. And it's been independent of any particular token or any particular platform. So right around 2017, as crypto was really getting hyped up, we actually launched our first blockchain fund. And our first blockchain fund was the one that sort of led the investment into this company. In 2018 is when we got the money to work alongside Goldman Sachs and General Catalyst at that time. And the 2018 sort of market crash, it created a rare sort of value point in core infrastructure in crypto and in digital finance, because there were companies being built and it really was possible to get in at slightly better valuations. So other people were sort of running for the hills. We saw sort of long-term potential here and decided to get in and invest in Circle and many other Bitcoin and crypto companies at the time. And we were following a pretty good pattern, I think. Jeremy Allaire, the founder, had taken 2 other companies public. You see here Allaire Corp on the slide, IPO in 1999. And he founded then afterwards, he was a General Catalyst, EIR, and he founded and then led Bright Cove to its IPO in 2012. So experienced entrepreneur who'd taken 2 companies public, had good public market experience as well as private to public market growth experience. So that was one thing I think that really drew us here. We had, I think, good network here in Boston, where I'm based, and got a chance to get a little bit of money to work alongside those 2 investors, Goldman and General Catalyst. So having those 2 big investor names added conviction, it de-risked the opportunity in our mind, and I think backing a really promising founder also de-risked it quite a bit. And Jeremy also had a very simple quotation here and a very deep mindset that he wanted to build a lasting internet technology platform, right? So he told people that he was founding a digital infrastructure company. He said it was a long-term opportunity, and he wanted to build this lasting platform. So I think that was pretty exciting. Obviously he was aiming for a big outcome. So Circle's journey to IPO from that 2018 time we invested on to now 7 years later in 2025. They launched the US dollar coin in partnership with Coinbase. Pretty clearly, they prioritize compliance and institutional partnerships from day one. I think that served them well, and they now have been able to see the US dollar coin circulation grow quite a bit with rising institutional demand, and that was sort of over the years 2020, 2022. They have a key partnership now including Visa, so that's a big deal. And they've maintained trust through this regulatory process, keeping things, I think, square and really doing regulatory rigor right across very volatile market cycles. We've seen these things go up and down in the crypto market in the last few years. There was the SVB crisis in 2023. They navigated that successfully. 2024 financials came out, I'm sure, in the filings for their IPO, and they got to over $1 billion in revenue, 1.68, and $156 million in net income. So really showing a very strong role there as a core digital payments infrastructure player. And then, like I said earlier, June this year, they priced June 5th, $31 a share. It opened higher than that, 69, and peaked within the first few weeks there at $298. So pretty substantial growth. I mean, it's come down from that 298 peak, but still it is much, much higher than the opening price there of 31 or even 69. The pricing's 31 and the opening price is 69. So pretty substantial growth since then. So let's talk a little bit about our diligence process, the risks, and how we felt this sort of fit into our fund. Key in our analysis was looking for companies in and around emerging technology. And as we found this one in the crypto space and finance space, infrastructure providers were a key area that we were focused on. They often capture more stable long-term value than this consumer-facing app, right? It wasn't just an app for disrupting banking. This was really providing digital pipes to help carry the transactions. And we felt like this infrastructure play would face less churn and have lower competition for user attention. So that was key in our analysis to go after a company like Circle. They also had complex regulatory engagement, and they engaged regulators and decided to be sort of regulation first and upfront. So compliance was really important to them, and that was important for us to see. Right, it enables companies to trust them, to join them, and I think big institutions could take on US dollar coin a little more readily, given that Circle really focused on the compliance aspect. Proven operators, we were backing Jeremy and his team. He'd already taken 2 companies public, so I think that was a exciting point for us. And it was crypto winter, so be contrarian with discipline. We were trying to go after some things here in the crypto space at a time when a lot of people were fleeing the crypto space. So we were able to look at this and decide this was one we wanted to go after. I'm sure we passed on many other opportunities that year, but this was one we sort of decided, yes, we're going to go in and get some money to work. So how do we find similar opportunities? Hey, this is not just one investment. Alumni Ventures has 1,600 plus portfolio companies, and Circle is one of those companies in the AV portfolio. We're diversified across sector, stage, and geography. We look at long-term, durable businesses, right, not hype-driven cycles, and we're trying to back founders who can execute right across these various different market phases. So important attributes here listed. We're always a co-investor, so we're never the one writing the term sheet. We're never the one setting the price. There will be some times when we sort of get to an investment committee meeting, and sometimes we turn things down, and that does happen. But in general, we're really relying on that diligence of that large venture firm who we're co-investing alongside, and we're talking to management about why they chose that venture firm. We're talking to that venture firm about why they chose that management team, and trying to make sure that we're doing our diligence on the deal itself and getting our little bit of money to work. And as many things will happen in venture, we're often thesis driven in our sourcing. I look at deals across the MIT ecosystem. My colleagues look at things across all the other alumni ecosystems. And then we also focus in on different technology market areas. So we're trying to always monitor the market for dislocations that can create good entry points for us as investors. So a little bit now onto how we find the next big opportunity, right? Circle was a great one, and hopefully it continues to do well. But the next opportunity could be in any number of different areas that are coming up. We've listed a few of them here. AI infrastructure, right? Building core tools that power the next gen applications. We all see everyone these days using AI more and more since that last ChatGPT moment a couple of years ago. We're going to continue to prioritize compliance, scalability, enterprise readiness. Right, the regulatory landscape I think is a parallel discussion to what we did with Circle, and we're going to do the same thing about leading with proven teams. Right, finding folks that have deep domain experience. So finding people that are in these areas that have been there and done that before with entrepreneurship and are now doing it, in the AI space. Quantum computing, that's another space. Hardware, I'd say, and software. We're looking at infrastructure plays here. Long-term intellectual property, have good regulatory moats, strong partnerships with big strategic players and government players. I think quantum computing will be one of the big enabling technologies. Probably not necessarily this year, next year, but 3, 5, 10 years down the road, this will be playing a huge role in our computing landscape. And climate tech solutions. We really are looking very hard at climate tech. I think there's a ton of different investment theses that you can find in and around climate tech. And there are many things both in our regular alumni funds as well as our focus funds, like our deep tech fund, that have climate tech as a central thesis. So they are addressing the same kind of moats, right? Regulatory, institutional sustainability. There are mandates there, and again, looking for results-driven business models with teams that have been there and done that before, right? That are policy savvy, understand how to navigate the regulatory frameworks that are shaping up in and around climate tech. Now, what are the risks in future outlook? While Circle IPO represents a significant milestone, be aware of ongoing risks that are out there in the marketplace, right? Digital assets are still in flux, and this is particularly true for Circle. So there are potential headwinds and tailwinds that could help or hurt the company. I think in recent days, we've seen different things get passed by the government that have both made Circle shoot up and drop down. So we'll see. Hopefully, they're still have a high price when we're able to get out of our lockup here at the end of the year. There's rising competition. I think there are traditional institutions also entering the stablecoin space. So we'll see how that happens when Circle can compete with those bigger institutions. And there are technology shifts, right? Blockchain infrastructure is still evolving. Circle's got to keep track of that and adapt if and when necessary. And then market volatility is something that we have to worry about, right? Public market appetite for crypto and crypto adjacent companies may fluctuate up and down. So what we do is try and work with that. And once we get through the lockup period, we're going to be selling our position to turn that back into cash for our investors. But despite the risks here, as the end of the slide says, Circle's market debut proves that regulated crypto firms can scale and thrive within the traditional financial framework that's out there. So in conclusion, right, the power of being patient and being disciplined with our capital. Circle was not a speculation play. It was infrastructure with regulatory foresight. We got into this deal and wanted to sort of benefit from their building of digital pipes. We really rooted our conviction in the leadership of Jeremy Allaire and his focus on compliance, and we had some good market timing for sure. The next decade, I think, will reward investors who aptly apply this approach to emerging sectors, such as the ones we just listed on the slide before. And we're going to keep looking for founders building the pipes of whatever tomorrow's tech economy brings. So we'd like to be your venture partner. Let me jump ahead to something about all of our funds and our investor profiles. We have a range of different investors who invest with us, most of them individuals. We've broken them up here into 5 different groups. You want to be the tech enthusiast or the venture curious, the legacy builder, a hunter of trophies, right, or the allocator of assets. All your choice, what bucket you want to fall into. But I think we have products that'll appeal to everyone in this list. So there are 2 ways to create your portfolio. Join us for one of our funds. And we have many different funds. You can go look at us at av.vc/funds and look at all the different funds. Or you can invest deal by deal, and you can select individual companies you'd love to invest in, and we'll share diligence materials with you, review deals one by one, and you can make an informed decision on each company as you invest. Or do what many do, as the tagline says at the end of the slide, cover your bases. Join a fund or 2 or 3, and then supplement those with your syndication deals. And that's another way to sort of get diversified, probably a little faster since funds have 25 plus companies in a fund. So ready for next steps. I think we're going to pause here and take some questions. I'll just scroll down through the web portal link and look for the questions, but you can scan the link over on the left-hand side of the screen for viewing fund materials to join one of our funds. You can join the AV Syndicate also by scanning the link just above that. Or if you want to talk to Dan, Stacy, or Darren, our senior partners, schedule a call. To schedule that call link, the QR code's in the upper right of your screen, and you can get a call scheduled, and they'll talk to you about all your fund options and syndication options as well. If you're already an investor with us, Stephanie or Hillary can talk to you, and they can be your first call as an investor to go over your portfolio, talk about how it's performing, and answer and get you help with any administrative questions or tasks you have. I'm just going to scroll down here and find some Q&A. Here's a good first question. Can you share more about Alumni Ventures' process for exiting a public company like Circle? Yeah, sure. That's a great question. So the company went public in June, and our stock is tied up, typically the 180-day lockup period. So think of June through, what would that be, December 5th probably. And sometimes the lockups could end a little bit earlier. You know, there may be some restrictions that say, hey, it has to end either 180 days or at the time of this announcement or that announcement. So maybe it'll end the end of November. But essentially, the end of the year, we should be able to sell that stock. And then once that happens, our routine exit committee will start to figure out how do we want to sell that stock. We'll probably sell it in, the public markets over a period of 2, 3, 4 weeks. And we have a broker help us do that in an orderly fashion. And that helps us get our cash back to customers. We always turn the priorities, the stock into cash, and then send that cash back to investors. So that's how that works at Alumni Ventures. And it should come back. Usually, if we get the cash back in Q4, we'll send that back in 45 days, I think, after Q1 starts, the next quarter, typically. Next question, how do the mechanics work to receive funds back for an investment like Circle if I invest through an IRA? That's a great question. So if you've invested in an IRA with us, basically with one of our partners, you'll have an IRA, which is for the benefit of investor. So like my IRA, if I had one, would be, this is my IRA for the benefit of Christopher Sklarin, and any investment proceeds that I get back from that IRA will go back into that IRA, which I can then reinvest, and I could reinvest that in a new Alumni Ventures fund, or I can invest that in something else that my provider provides. So you can't benefit from the IRA until you retire, so it'd have to go back in the IRA and be used for future investments. But that's typically what happens. And if you invested with us with cash, your investment comes back to you in cash. So that's sort of how it either goes back to the IRA, or if it was a cash investment, it goes back to you in cash, one or the other. And that's I think a IRS rule. You just can't benefit from that IRA until you retire. Here's a great question. How do you get allocation in oversubscribed rounds led by these top leading VCs? Great question. I think we work really hard. It's like any sales process. We work really hard with management teams and with our co-investment partners to prove our value. And so it's not our check size necessarily that gets us into a round, but I think it's more of our network, our expertise and our network. We have, I think, at the fund that I manage, the Castor Fund for MIT alums, we have 31,000 alums that are in the network. And we have an expert network as well across all of Alumni Ventures, which has 5,000 to 10,000 people in the expert network. So I think those kind of connections help management teams understand the value we can bring to them, and helps get us into deals. Our check size might be a few $100,000, or it might be $1 million or $2 million. I've seen even larger deals where we do syndications. So sometimes we could bring a larger check, but really it's the opportunity to bring follow-on investment and bring our network to bear that I think helps. And management teams love the fact that, hey, they can be giving back. The institution they went to school with did great things for them. They have a chance to give back to Alumni Ventures and to alumni who are from their institution. So they like that idea of having alumni as investors in their company. Let's see, our last question here. Do you have internal sector specialists, or all AVs investors more generalists? That's a great question. I'd say that our funds are often generalist funds, but we also have some sector-specific funds, and our investors are very T-shaped. So while our funds might be general, we have investors that are very T-shaped. So maybe you have an investor who is very T-shaped and has a ton of expertise in behavioral and consumer behavior, or you have another investor who's got a deep expertise in deep tech and things in and around nuclear and other deep tech sort of investments. Then we have some investors who might have super expertise in AI and AI computing infrastructure. So it really depends. I'd say every investment team is going to be made up of 3 or 4 individuals. They all have deep T-shaped experience. And so there's a lot of expertise there. But then we also reach out to our expert network. And our expert network, oftentimes on our investment committee or in our expert network, we can find people who have deep expertise. And we try and use them on Diligence, also to help our companies when they do go-to-market panels or pitch practice sessions. So really, it's a mix of both. But I'd say on the alumni fund side, very general funds, trying to give you a broad view of the venture capital landscape in the year we're investing. And then on the focus fund side, obviously a healthcare fund is going to be very, very healthcare focused, or a women's fund is going to be very, very focused on women entrepreneurs and women companies. So both things can be true. And if you look at av.vc/funds and sort of explore our funds, you'll see that all over. All right. Well, thank you all very much for attending the webinar. Really pleased that we were able to talk about this Circle IPO and also the venture associated landscape, and look forward to talking to you again soon. Bye now.
All right. Thank you, Chris. That was wonderful. Sometimes the best investments aren't the loudest. They're the ones quietly running the system everyone else relies on. Thanks for being with us today, as always. And if you're ready to learn more about how to invest in the infrastructure powering tomorrow's digital economy, scan any of the QR codes or visit av.vc to connect with us. Thanks for being here with us today, and we will see you next time.